What's up, guys? Welcome back to the trading world. In this video, we're going to be reviewing the NASDAQ futures market for February 3rd, 2026, and we're going to be covering all kinds of real trades you can take to make real money. If you guys like this type of content, definitely consider leaving a like, subscribing, following me on X, and checking out my completely free Discord. The link to that is in my bio. So, today, the bias was extremely bearish. You can see how violently we went lower. And this was confusing for a lot of people because at first glance, you look at this and you say, oh, wow, we're expanding higher. We should just go up. But it's very important to notice a few key details. First of all, we had the overnight gap below us. So if you guys don't know, the overnight gap, also known as the RTH gap, it's going to be really good for bias. Actually, it's my favorite way to get bias. You kind of just see, okay, where is the gap going to form from the close of yesterday to the open of the 9:30 open of today? And you can see that gap formed to the downside, so we know bias is likely going to want to fill this. It's not always the case, but it's a good probable outcome is that this overnight gap is going to want to get filled. As well, what's cool is, first of all, I want to show you this one. So this is the true month open of January. So what even is that? It's the opening price of the second Sunday of the month, and that's going to be it's the opening price of the opening price of Q2 of any given range of time. That's what a true open is. And look at how we perfectly come above the true month open. And yes, we're using last month's because we do not have a true open for this month yet. And then if we go to lower time frame, we have a new week opening gap, and then we manipulate all the lower time frame true opens as well with SMT, right? So isn't this fascinating? The way the market forms SMTs and manipulates these time-based premium and discount levels. And once you see it, guys, and it's kind of confusing at first glance, but once you see this, you'll realize this is how the market moves. It forms SMTs above true opens and then expands. And so anyway, obvious drawn liquidity was the overnight gap. Trade of the day, in my opinion, was a trade that I spotted right as soon as I got on the charts, within the first minute of getting on the charts, actually. And, well, I should have taken it. Let's just be so for real. I should have taken this trade. It had only been 1 minute since I got on the charts, and obviously, it's kind of scary to take a trade within the first 5 minutes of getting on the charts, but this was super, super nice. And I really just have to accept that I don't control the outcome of a trade. If a trade is a good trade, take it. Execute it. Don't care about the outcome, because I'm going to actually play the clip so you can see that I'm not just showing you hindsight. I knew this was a good trade. You can go watch the beginning of the live stream here. I have this whole thing framed out. Now, at the time, I actually didn't even see the new week opening gap, but that was a nice bonus. I know I just got on the charts. I'm not going to take it because I just got on the charts, but I really did like this. And the reason is we obviously sweep out all these highs with 2 SMTs, and then we have a 5-minute change in the state of delivery right here. We close below, and, well, it's very clear to me as well. That's why I have this indicator with these white lines, that we've manipulated both of these true opens. And now I also understand that we have the overnight gap below. Understand that that's likely going to want to get filled. And you can see here's that 5-minute change state of delivery. I actually call this, I've nicknamed anytime you get a change state of delivery off the new week opening gap, I've nicknamed that the shadow model. So in case you want to know what I'm referring to when I say that, it's just a change state of delivery off of a new week opening gap. And it's going to be the best when you manipulate all the true opens with these SMTs. And then bang, we go fill the overnight gap. So that was pretty cool. Then as well, next we have obviously there's many ways you could have taken it. I think the most realistic way to have taken it was just targeting 2 projections, not being too greedy, just going for 2R here. But you could have held it. You could have held it to go fill the RTH gap. So that's pretty cool. Next thing I'll talk about is my actual trade I took. So the trade I took was right before market open, and it was actually, in my opinion, it was a really good trade, and I would take it again. It ended up being break even for me, but I really actually liked it a lot, and I'll show you it right now. So the trade I took was an outside bar, and I'll go over this red line in a second. So if you guys are confused by that red line, don't be. I'll explain it in a second. But the trade I took was this outside bar. So we have a green candle. The next candle after that green candle takes the high and the low, or takes the high and the low of the previous candle. So this is a outside bar. And the reason I like it is because it's at 928. It's going into market open. I know the bias is bearish because we have the overnight gap below, and you can clearly see that that played out very, very nicely. I'm going to get rid of the cam for just a second. You see that played out very, very nicely, filling that overnight gap. And what I had to do was I should have, at the very least, partialed at the midpoint, right? You can see I should have had, I entered with 2 contracts, so I should have partialed at the midpoint. Ended up getting break-evened out. And in all honesty, in this kind of situation, if I was to redo this trade again, I'd probably just take all off at the midpoint here. And then later on, if we came back up, I'd look for a new entry to go target the whole thing, the whole overnight gap getting filled. So, but the reason this was nice, the reason I like this is, once again, because of true opens, right? We have a 90-minute true open here, and then actually 928, the opening price of 928, which is the 22-minute true open, is this candle. We wick above it. We wick above it. I call these a thanks for liquidity wick, or Dodgy calls them thanks for liquidity wicks. And basically what that means is we wick out this entire range, and then we close lower. When that happens, I can tell, okay, everyone else was stopped out here. This is a really good signature in price. I can go break even at this low. And if market open does deliver us lower, then we're probably going to go fill this whole thing. And the best part about it all was delivering from this key level, which I'll get into in a second. But yeah, really love that trade. And here's me taking it live. So here's the video.
Maybe is that worth taking?
And I gotta work on my conviction because obviously it's a really good trade, and I was
Sure,
a little
let's do it.
hesitant, but it was a really good trade. And then you can see it playing out, right? I needed to take a partial at the midpoint, and you can see I get stopped out there. But at the low, I was up 3R, which is pretty cool. Okay, so now you might be wondering, what's this red thing? Actually, before I get into that, I'll get into the Reaper gap in a second. The other trade that I really, really liked was, you may remember I just said I would take that outside bar to go to the midpoint of the RTH gap, and then if we got another trade later, then I would take it to go fill it. And so that other trade later that I would take it to go fill it is this trade right here, where we have accumulation range. And you guys may remember, I talk about how all the time AMD can be sneaky. It can be very sneaky. It will happen in ways that you least expect. Like, people might think, oh, this was manipulation. But no, typically manipulation is gonna be like just barely above all the range of where price was, right? And so you can see manipulation is right above this accumulation range. We soup the 90-minute and 22-minute true opens, so this is how we identify true manipulation, right? When this occurs, and we have the overnight gap below that's unfilled, I mean, obviously this is a large wick, so usually you don't like to take inversion for value ups when it's a bigger wick. But in this case, because it's the 5-second chart, these wicks on the 5-second chart are pretty much erroneous because it's the 5-second, right? So we get a move up, and then what I call a dodgy OB, which is basically we inverse with so much momentum that we also create an OB. I'm going to have a video coming out on that later this week. And then you can just clearly see this was accumulation, manipulation, delivering from the Reaper gap, and the 5-second inversion for value gap to go fill the RTH gap. And you could have even held it, and obviously this trade, we ended up going lower for the whole entire rest of the day. So that was pretty cool. Okay, so I really like that trade as well. Here's another image of the AMD. And you can see how low we went. We went pretty far down. We kept going much further than that, actually. Look at how far we dropped. Here's the AMD. I don't know where the... Anyway, we went down like, what, 300, 400 points? It's crazy. Okay, next up, let's talk about that Reaper gap because I think that's pretty cool. Oh, actually, first, we'll talk about a Phoenix model that happened at 8:30, right? So, once again, at the new week opening gap, we know the bias is bearish because the overnight gap is below. We're above every true open. We get bearish SMT with this rejection block. So here to here, here's the rejection block. And then you put a limit order at that rejection block. And it's above all the true opens and we go lower. Once again, Phoenix is for basically if you want to hit super high RR trade and you want a top tick. That's basically what it's for. And you put your stop loss above the rejection block. Okay. So if you don't understand Phoenix, watch the video on that one where I explain that. Then, okay, so this is another outside bar. So we have, once again, delivering from the new week opening gap with SMT. We have a old candle. The next candle after takes the high and the low. And what I really like to see is a closure lower. And then, boom, delivery lower to go fill that overnight gap. It also came with SMT here and SMT here and a sweep of these highs. Once again, manipulation of all of the true opens. Okay, now let's talk about this Reaper gap. So this was a super tricky Reaper for value gap because I don't think, honestly, even if you understand what the Reaper gap is, I think most people would not spot this because it's a very, very tricky one. What? By the way, if you don't know what a Reaper for value gap is, it is it is basically a gap in premium of a breaker block. So here's the breaker block, right? And you can clearly see this on the higher time. Here, I'm gonna show you on the higher time frame first. So we have a breaker block, which is these down close candles. Why are these down close candles a breaker block? Because it's a high, so swing high, swing high. Well, it doesn't even have to be a swing high. It could just be a series of down close candles before the final move up. So high, low, higher high, sweeping liquidity, lower low. Usually when you use a Reaper gap, you're going to want to have the breaker kind of already closed below. So usually you want to close below. But this case, high, low, higher high, and then lower low. We hadn't even made the lower low yet. I anticipated that this was going to be a breaker before it was. And so anyway, dropping back down to that image. So high, low, higher high. We know this is likely to be a pretty strong high in the market because it manipulated all the true opens into the new week opening gap. So high, low, higher high with SMTs, and then anticipating a lower low, anticipating this to be a breaker block. Usually I mark out the imbalance like this from here to here, but I couldn't pass this up. This was just such an obvious volume imbalance within premium of the breaker that I knew that was going to be the most sensitive part. So you drag that over. Oh, whoops. Shoot. You drag that over, and what do you see? You see orders getting filled right before market open, before the market dumps. And it goes to fill the RTH gap. Once again, see that volume balance? See how the market is respecting it. You can't make that up, guys. You can't make that up. And what's cool is we go down. I mean, it's not realistic to catch this, right? But we go down. I don't think that's the full image. I think there's a bigger one. Anyway, this is all I have. So we actually went down 300R if you had just put a limit order at that Reaper gap. Now, that is something I call the Reaper kill shot, and I'm not gonna lie, this is the first time I've officially said it, but basically you just put a limit order at the Reaper with a super tight stop and we go lower. I honestly don't recommend this. It's probably, you know, it's probably gonna work out like one in like, I don't know, however many times, but when it does, you know, you get the whole entire move and you get like 100R. But it's still pretty cool, right? It's still pretty cool. Cool idea. Anyway, if anyone ever catches a Reaper kill shot, please let me know, bro. I want to see that. And so anyway, that was pretty cool. And so anyway, I knew that was the Reaper gap, and you might be saying, oh, well, that's all hindsight. You did not know about that in live market. Well, check this out, right? Here you can see I have the volume imbalance marked out. Before the breakers even formed, I knew we had a volume imbalance in premium of this breaker. And once again, I could have used this like implied gap here, meaning just kind of like merging all these candles together. There's obviously an imbalance right up here. But instead, I saw that volume imbalance. I knew that was just like the most obvious thing in premium of that breaker, or soon to be breaker, because it wasn't yet. And then I marked this out kind of as like, you know, expecting it to be high resistant, that we're gonna push up into it and then go lower. And then watch this, right? You can see I draw out this arrow here because I'm anticipating the market to go lower here. And then obviously you know what happens next here, right? We ended up going way lower. And then, yeah, the rest was history. So, pretty cool. Is there anything else? Yeah, I think that about covers it. So, anyway, that's going to be it for today. Hopefully you guys enjoyed this video. Let me know how I can make these better. And I'll see you guys in the next one. Peace out.